Hello, everybody. Welcome to Tuesday. The S&P 500 was up 0.5% today. Second day in a row we've had an up day. The Russell 2000 was the bigger winner today. The small cap index was up 1%. A pretty good time frame, but really we're kind of in a waiting day today because tomorrow is when the Federal Reserve meets. And they'll meet to come out, talk about what they decided, how much to raise rates, and then there's a question and answer session. Any positive or negative surprises, that come out of these different comments will be reflected in the market right away tomorrow. So it'll be very fascinating to see what happens there and what they have to say. And I just want to emphasize, and kind of demonstrate really how important the Fed is here, because the Fed is the one organization, institution here that has some control over what they say and do that could make a big difference to the economy and ultimately to the stock market. So, on one hand, we have this very powerful American consumer right now, saved a lot of money during the pandemic, paid down their debts, and now they're spending. And then on the other hand, we have these things that are kind of tamping down the economy, the COVID situation in China with the lockdowns, the Ukraine situation. And of course, interest rates have already come up a lot, even though the Fed hasn't moved rates. They've talked about it enough, and the market has moved rates. And so mortgage rates, for example, have gone up quite a bit. Housing market should theoretically slow down during this time period, which would obviously create a situation where it starts to come down. And so, for example, if you look just a couple of weeks ago, the market was doing okay, starting to bounce back up. And then Chairman Powell, Federal Reserve Chairman, came out and said, hey, we're going to raise rates a 0.5% and very aggressive talking about what they were doing. Market fell pretty heavily. And so what the market's looking at there is, hey, we already have all these things that are trying to slow us down. And now you're talking about slowing us down some more. We're worried that you're going to do what you've done in the past a few times, which is over raise rates and kick us into a recession, and the market starts to react to that. So, we can't control China, we can't control Ukraine. And so the Federal Reserve is one place that they can actually control, again, what they're saying and doing. So it'll be very interesting to see how they work through this. Smart people, lots of good data. And so hopefully they'll be able to kind of find that middle ground to get us back into that kind of 2 to 3% inflationary range. We'll see how this plays out as far as that goes. But very important. Part of becoming a better investor is to really understand what the most important components are. The Federal Reserve is definitely in the top 2 or 3, in my opinion, in terms of how important they can be to the market. And you'll see that tomorrow as the market responds to the comments and what have you too. So look forward to talking to you tomorrow. I'll tell you kind of what they said and what the market reaction was and what my opinion is about what happened there too. So look forward to seeing you then. Thank you very much.